Hey everyone, and thanks for jumping back into the Cryptoverse. This is the weekly premium video on portfolio performance based on weighting your portfolio in very different ways. Okay, before we get to that, I want to do a couple of updates on the NFT. A few months ago, we said, go fill out your Ethereum address on this website, and if you do, you will receive the first Into the Cryptoverse, or ITC NFT. And over the last weekend, we actually went ahead and minted 5,200 tokens, 5,200 NFTs of this. Okay, so this is the first Into the Cryptoverse NFT. And there's 5,200 copies. Every person only got one. I would encourage you to go see if you have it. If you're not sure how to find it, I will post instructions on how to find it in the description below. Okay, now if you just put in your Ethereum address a couple days ago, you're unfortunately not going to have it because we did have to take a snapshot. But if it's been in there for a while, I would recommend going and looking to see if you in fact received the NFT. Okay, and I'll leave instructions in the description of the video on how you can go view it. Okay, but again, this is what it looks like. It says what's a few NFTs among friends, and if you scan the QR code, it'll take you to the website where we'll display the various Into the Cryptoverse NFTs. Now, I wanted to do a video, and we've done this similar video before. We did it back in 2019, and the reason we did the video was back in 2019, which I'll also link in the description below, is we said, all right, well, what strategies in terms of allocation to the top 10 cryptocurrencies could we look at from the last cycle and deploy in the current one? And those strategies, I think, are useful in navigating, the future market conditions, right? Future cycles, and even in the current cycle as well. And again, so I would first recommend, if you haven't seen that video from 2019, it was a couple years ago, but I thought it was pretty useful. Go back and watch that. Maybe some of you have already seen it, but it was a pretty useful video, I think, because it sort of showed how various performances or how various portfolios would perform under different or throughout the market cycle. And so while altcoin heavy portfolios can do really well at some phases, Bitcoin heavy can favor other phases of the cycle. So what I want to do is I decided to just pick a date. Okay, I said, well, what if we just pick January 1st, 2021? And we said, you know what? Let's look at the top 10 cryptocurrencies on January 1st, 2021. And how would your portfolio have performed if you weighted your allocation of, say, an initial $10,000 investment? How would it have performed based on various portfolio weightings? Now, the first thing to understand is, well, what were the top 10 cryptocurrencies? Because you need to know what they were if we're going to try to understand, how the different portfolios performed. If you go to over here, the historical snapshot on January 1st, 2021, we're going to exclude stable coins, okay? So it was Bitcoin, Ethereum, XRP, Litecoin, Polkadot, Bitcoin Cash, Cardano, Binance Coin, Chainlink, and BSV, okay? Because we ignored this stable coin here. We're gonna ignore USDC, and then we're also, of course, gonna ignore wrapped Bitcoin. So then BSV. Now, I as I said back then, I do not recommend either Bitcoin Cash or BSV. I don't think these projects are worth taking too seriously, in my opinion. Some people disagree with me, and that's fine, right? That's fine. But the point of this video is to just carry it out in a very, a very systematic way, not cherry pick which coins. Just say, okay, the top 10, how would they have performed based on different portfolio allocations? All right, that's what we're going to look at. So with that in mind, let's go look, okay? So the first one is weighting it market cap raised to the first power. You may say, well, what does that mean? What is market cap raised to the first power? It's just the market cap, right? If you raise anything to 1, it's just that number. So this is if you looked at the market capitalization and you put money into those cryptocurrencies and you weighted it based on what the market cap weights were of the top 10. And if you did that and you just did it on January 1st and then you just let that portfolio ride, at the peak it would have gone to between say $40,000 to $45,000, and right now it would be somewhere between 20 to 25K. So you're still looking at essentially a 2.5x on your investment had you invested $10,000 on January 1st of 2021. And note that about the first or second week of January was when I stopped putting money into crypto, just because of at least new money, right? I did some trades from crypto to crypto, but we spent years, I spent years accumulating, and I said, all right, guys, it's time to let it ride. Let's see where this run takes us. And again, Bitcoin made it to the 0.9 to 1 risk band. It has come down since then. But anyways, this is the market cap, weighted just to the first power, which means just weighted by market cap. So a majority of it's going to Bitcoin, but there's still enough to go to altcoins. Because if you think about it, the price of Bitcoin on January 1st, if I'm not mistaken, was, let's see, $29,000. And today it's $34,000. So if it was $29,000 then, today it's $34,000. That's not really a huge change, right? That's not really a huge change. But if you come over here and look at this, you can see it'd be 2.5 times up. So there was enough allocated to altcoins to outperform Bitcoin during that time, okay? But what if you had wanted more Bitcoin? What if you wanted to be super conservative and you said, you know what? I'm not going to play the games of the altcoin stuff. I want mostly Bitcoin. Maybe I'll get a tiny bit of altcoin. So let's say you decided to weight it by market cap squared. Okay, market cap squared, meaning you're squaring the market cap. So the larger numbers are essentially going to be weighted even more. So you're going to be putting more into Bitcoin. Well, what if you had done that? If you had done that, this is what it would have looked like. Your peak ROI from then would have only put you at just over 25K, and now you'd be sitting at around 15K. Okay, so maybe not as much downside, but you still would be sitting a little bit better, right? You still would be sitting a little bit better. Let's take it even further. What if you cubed it, right? You cubed it. So you're getting really high Bitcoin at this point because Bitcoin's already, so far ahead of the other cryptocurrencies. Then you get something that looks like this, okay? But what you'll notice is it's starting to converge to something. So what we could do is weight it to the, basically to the infinite power, where you're weighting it so much that everything just goes to Bitcoin, right? Everything just goes to Bitcoin, zero to everything else. And if you did that, then this is what you get, okay? So it shows you how having some altcoins in your portfolio can improve the performance of your portfolio, especially when you go through these manic phases, right? And even with the drop, having some altcoins is still outperforming having only Bitcoin, okay? Now, again, I contend that we're at the phase where the Bitcoin dominance is going up. And this is why I keep saying I'm only buying Bitcoin at this stage. I took the profits on the coins I wanted to take. Now I'm buying Bitcoin at this stage because I think Bitcoin's going to outperform the altcoin market. And if Bitcoin's going to outperform the altcoin market, I'd rather just buy Bitcoin, right? Less risk, and just leave altcoins. The way I see it is leave altcoins to the side right now, because when the market pulls back like this, and when Bitcoin's just range bound below the 20-week SMA, these altcoins can get they can get chopped up, and so that's how I'm focusing. It's okay. I think we see where we currently are in the cycle. Bitcoin's probably going to outperform most of the rest of the market for a little while. Therefore, it makes the most sense to go into Bitcoin. Now, you might say, well, Ben, what if we're not super conservative? What if we want to have more altcoins? Well, to do that, you can weight it by, say, a fraction, right? You can weight it by a fraction. So let's say you weight it by 0.75, meaning you're actually putting a little bit less now into Bitcoin, and you're slowly increasing your altcoin percentages. Looks like that. So your peak performance would have been closer to 50K. Okay, closer to 50K. And then today it would be down, this is 20, 25, 30. So it'd be down, maybe 26, 27K. All right. So, which isn't that much higher than, than this one right here. But let's say you weighted it to the square root, like 0.5, even better returns. 0.25, even better returns, right? So you might say, well, how does this work? I mean, obviously it doesn't really make a whole lot of sense to just go full altcoins. Well, yeah, you're right. because the downside potential is fairly large. You can see that this is pulled back fairly significantly. I will contend it's still ahead right now. So the 0.25 portfolio is still leading. But if the Bitcoin dominance were to continue to go up for a number of months, you might start to see some of these other portfolios that were heavy altcoins, you might start to see them underperform eventually. And that's why anyone who's super heavy into altcoins, it always makes sense to take profits, okay? And whether you want to take them back to stable coins or back to Bitcoin, it's, it's to something, right? To something a little bit more stable, because this is not sustained, right? These things are not sustained when you have these heavy altcoin portfolios. They can come back down really quickly. So the name of the game, right, is you want to have Bitcoin. And Bitcoin goes on a crazy run at some point. You can DCA USD into altcoins. You can take profits from Bitcoin into altcoins. You let the altcoins ride a bit. You take profits out of the altcoins, back to Bitcoin, back to stable coins. You let things calm down again. You go back to Bitcoin, or you keep rinsing and repeating this cycle. And so, again, right now, this very altcoin heavy portfolio is still outperforming. But if the Bitcoin dominance were to continue to act like this, for say 3 to 4 more months, then my guess is that this portfolio could start to underperform. Now, one of the reasons this portfolio is probably doing so well is because it includes Cardano. And again, Cardano was, again, viewer discretion is advised, but the value of Cardano was only 17 cents back on January 1st. So there's something to be said, obviously, to have loaded up on altcoins. And this is why I spent a lot of time saying, okay, these are the main altcoins we want to focus on. So let's go back and look. We see that raising it to the 0.25 would have done better out of all these. Well, then it begs the question, right? It begs the question. Well, can you just solve for a portfolio? And of course, we have some constraints on here that maybe depending on how much interest there is in this type of a video. We used to do these videos all the time back in 2019 and 2020, and then the market just went crazy, and we were just I was trying to get everyone onboarded. It's hard to come up with all this portfolio theory type stuff when the market's just going crazy. Remember, you prepare for the market going crazy during times like this, and then once it does go crazy, then you cash in on your strategy. So then you look at this and you say, well, it begs the question: is there a portfolio that we can solve for that would have performed the best? And there is, right? There is. So, but I guess before I do that, the other exponent, just raising it to the zero power, which means just putting $1,000 into each crypto. So if it's 10,000 total, top 10, $1,000 into each, you're weighting them the same, it sort of starts to converge like this one did down here. So then it begs the question, well, what is the optimal portfolio, right? Because as I was mentioning earlier, the 0.25 is still ahead of raising it to the 0.5. So remember, as you go up these curves, it's less Bitcoin, okay? So less Bitcoin as you go up. But then watch, when I add 0, which is super altcoin heavy, it's below the yellow line. So this most recent one is super altcoin heavy. All right, 90% of the initial allocation went into things besides Bitcoin. And at the peak, it was among the best performing portfolio. At times it was the best, but right now it's not the best. And why? It was because it was super altcoin heavy. And when the Bitcoin dominance is going up, then you start to see it underperform. So you're getting to that underperforming stage against Bitcoin. So that's why, hopefully this makes a little bit more sense. That's why one of the reasons why I've been saying, okay, this is the time to focus on DCAing Bitcoin if you're going to buy crypto. If you're convinced that Bitcoin's going to go, to much lower values and you're just sitting out of the market, that's fine, right? That's like a risk you can take. But that's also, to some degree, I feel like it's coded in the risk metric, right? Because we're only in the first risk band. So it's sort of the lowest DCA amount. If we go to the next risk band down, then I just double up. I double the DCA. If we go one below that, I triple it. So that's the general idea in terms of how I like to navigate the market. So then it begs the question again, well, what is the portfolio to maximize the peak and to maximize the current value? Well, if you maximize the peak, it would entail raising the portfolio or raising the market cap to the power 0.13287287.5. And if you did that, it would have maximized your portfolio performance at the peak. Okay, but it's also, that's also not too far away from just putting $1,000 in each crypto, right? And that was essentially the conclusion we came to a while back in the video from 2019, which you'll see. And then what if you said, you know what, I don't really want to sell, I just want to maximize my performance today? What would it have been? Well, to maximize your performance today, I would have entailed raising it to the 0.246587955 power and weighting it that way. So the point is, you know, when things are moving up, obviously altcoin heavy portfolios can do very well. When things are moving down, these altcoin heavy portfolios that at one point were doing really well will start to lag behind portfolios that had a little bit more Bitcoin. Okay, so the longer Bitcoin spends below the 20-week chopping sideways, the more of these portfolios over here will probably cross over and start to underperform slightly heavier Bitcoin portfolios. Okay, and you can already see that this blue one is now well below the yellow one, which has a little bit more Bitcoin. Hopefully that makes sense. Now, if you're curious, you know, if you don't really know how to weight this stuff, I did provide at least a table to show you how they would have been weighted. So like, you know, if you started with say $10,000 and you just weighted it by market cap, this would have been the allocation to those top 10. So you can see it would have been like $8,000 into Bitcoin, 1244 into Ethereum, you know, 147, 148 into XRP, and it's getting pretty small at larger values here. You weight it squared, it's basically all Bitcoin. I mean, not quite, but all, but you know, it's all Bitcoin and Ethereum more or less. I mean, you know, these are, you know, these don't even cover the fees, right? Market cap cubed, 9962 Bitcoin. Obviously, infinite is just $10,000 straight into Bitcoin, nothing anywhere else. You raise it to the 0.75 is 6,500 into Bitcoin. Raise it to the 0.5, 4,400 into Bitcoin. Raise it to the 0.25, 2,500 into Bitcoin. Zero, this is just $1,000 across the board. Okay, and then you can see what would have optimized it. What would have optimized the peak and what optimizes it today. So optimizing the peak and just raising it by these powers would have been like this. And there are some assumptions baked in, right? One assumption is that you actually have to buy all of these, and you're essentially just applying a blanket mathematical operation to the top 10. It's obviously easy to look back and say, well, these are the ones that performed better, these are the ones that didn't. I mean, you know, clearly I'm happy that I haven't been holding BCH and BSV. Obviously, you guys know I'm not a huge fan of those coins. I've also said Litecoin is not really one you want to go too heavy in either. I've mainly been in Bitcoin, Ethereum, Link, ADA, and DOT. And I'd like to think, I mean, Bitcoin and Ethereum did, you know, pretty well. ADA did remarkably well. DOT went from like $3 up to $50. Link, you know, I mean, it could have done better. I'll give you that. But it's also one of the ones that we may expect to do better if Bitcoin's back above the 20-week and not putting a new all-time high. So hopefully Link will come through in the clutch when the rest of the market is not one day. But anyways, I thought this would be a useful exercise. And I'll be curious to hear, you know, do people like these types of, you know, weekly reports? Do you like diving into various portfolio? We could obviously weight things differently, like logarithmically or other different things. You guys like this? Let me know in the comments below, and I'll use that feedback to try to figure out what I want to do for future premium videos. But you can see that the one that would have maximized the peak would have been something that looked like this. And remember, you're applying the same operation to the top 10, so then raising it essentially to the 0.133. You do that, you get 1,600 into Bitcoin, 1,260 into Ethereum, about 950 into XRP, 926 into Litecoin, 934 into DOT, 895 into BCH. Obviously, I would have not put money into that one, as I told you guys. Also, would have not put money into BSV, which I think would have improved the returns of the portfolio if you had gone down the list. I think, you know, Stellar Lumens may have been next, and that one actually did pretty well. You know, and then you can see like 881 into ADA, 877 into BNB, which did remarkably well, 853 into Link, and 811 into BSV. So for instance, like BNB is not a coin that I own, but it did very well. And so if you apply this type of thing and just said, okay, I'm just going to pick the top 10, and then maybe you can cherry pick which ones you want to exclude, but you pick the top 10 and you say, okay, I'm not going to take any Bitcoin forks. So I'm just going to go ahead and get rid of BSV and BCH. Maybe I don't want to do Litecoin because it doesn't really do that well. Maybe even sit out XRP because of the SEC stuff. And then you go Bitcoin, Ethereum, DOT, ADA, BNB, Link, Stellar Lumens, and you just go down the list, right? So you could apply this type of analysis over and over again. But remember, this is what it looks like when you go through the bull phase. And if we are met with several more months of bearish times, then the altcoin heavy portfolios will start to underperform the ones that are Bitcoin heavier. And you can already see that in some of the charts that we showed. Okay, especially as you raise it to the 0 power, you can see it's now underperforming one that was a little bit heavier in Bitcoin, but not by very much, right? So 0.25 to 0. 0.25 initially had 2353 in Bitcoin. 0 had 1,000. So this one is now slightly outperforming this one. Okay, so keep that in mind. Let's now switch it over. We'll look at the risk dashboard now. Let's see where we are. So the risk on Bitcoin is now 0.423. Obviously, we're still in DCA territory, but obviously 0.4 to 0.5 is the highest DCA band for moderate risk tolerance, which is what I go with. So it's sort of like the lowest DCA amounts you're comfortable with. And then if it goes below that 0.3 to 0.4, it would entail trying to double that up or trying to increase it some way if you want to follow that strategy. Ethereum's at 0.441. Again, I'm not buying any of these. Links at 0.339. ADA is at 0.402. That's at 0.124. Don't put too much weight into the risk metrics that have a confidence of 2. Okay, the ones that are 9 and 7, these are better. The ones that are 2 are not that high. Like 8's pretty good. We're still 28% down from the 20-week SMA. So nothing's really changed, right? On a week-to-week basis, nothing has really changed in terms of where Bitcoin is. And if you look at the weekly candle, we actually have closed a little bit below some of the last weekly closes the last 2 months. We closed at 34,258, and before that, this one was at 34,706, and this one was at 34,699, rounded to 34,700. So a little bit of weakness, right? A little bit of weakness that it wasn't able to. It tried to push back up, and we made it there for a little bit, but then we came right back down. Like if you go look at, I say, like the 15-minute chart, you can see that we made it to that 34.6, close to 34.6 area, but we were unable to hold it, at least so far. But anyways, I think that we covered a lot, right? So remember to check out the description below to figure out if you can get your NFT. By the way, they've already been minted, so if you haven't put your Ethereum address on there already, unfortunately, I can't mint anymore. It's hard-coded into the smart contract. Only 5,200 were minted. They were sent out to the people who got it in before the deadline. So make sure you follow the directions in the description to go see if you got the NFT. And if you didn't get it, I would still recommend going to the app.intothecryptoverse.com and putting in your Ethereum address. Maybe we'll have a future NFT. I don't know. I'm not going to promise anything, but maybe we'll have one in the future. You can also use this to access the risk dashboard, strategies, videos, reports, Telegram bot support, Android app, iPhone app, staking, and the merchandise. And if you want to get like a t-shirt, you use this discount code and you'll get like some percentage off. Anyways, that'll wrap it up for the video. Hopefully you guys enjoyed it. Leave a comment down below. Let me know what you guys think, and I'll see you next time. Bye.